$150 silver this year. We were talking earlier about Bank of America, maybe 309 is their target. So silver could go anywhere this year. It could keep going. It's approaching, what was it, a 49 to 1 on the gold silver ratio. I mean, it
Yeah.
could keep going to where you get a 40 to 1, maybe even a 35 to 1.
Yeah.
And it doesn't look like silver is going to stop.
Grow substantially, I think that central banks will start buying silver if they're not buying already. The same type of buying that we're seeing in the gold place, in the gold world, I think it looks like the silver space. Every dip is being bought. And I know we're talking today on the day that we're seeing a dip. And it's just outstanding how this market continues to be bought in those days. And so I don't think how this is likely to change. I'm very involved in the discoveries and in the world of looking for opportunities on that side. And I can tell you, there's no major discoveries that will change the landscape of supply of silver anytime soon.
The silver market is primed for a historic breakout, with aggressive price models now forecasting a surge to $150 this year as the gold-to-silver ratio compresses toward 35 to 1. This bullish momentum is driven by a structural supply deficit, with every market dip aggressively absorbed by institutional capital. RobertKientz, founder of GoldSilverPros, and Tavi Costa, a portfolio manager at Crescat Capital, break down this explosive scenario, highlighting Bank of America's shocking $309 price target as a potential reality. They argue that central banks are likely entering the silver market to mimic their gold accumulation strategies, exacerbating a shortage in which no significant mining discoveries are expected to bail out the supply side. With the ratio currently sitting near 49 to 1, the speakers emphasize that the window to acquire physical metal is closing before the market realizes that supply is inelastic and totally unable to meet this new wave of monetary demand. Now, we present the clips from RobertKientz and Tavi Costa's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We're not even into the big retail rush here in the US. And I think that's a big sign that we got a long ways to go. And I think last week I said at least $150 silver this year. We were talking earlier about Bank of America, maybe 309 is their target. So silver could go anywhere this year. It could keep going. It's approaching, what was it, a 49 to 1 on the gold silver ratio. I mean, it could keep going to where you get a 40 to 1, maybe even a 35 to 1.
Yeah.
And it doesn't look like silver is going to stop. And the big question is, like the CME group, you know, if you watch my channel, you guys listen to me all the time talk about margin hikes and what the COMEX is doing. And they're raising the margin on contracts where the spot price is determined on that paper market to slow down the number of contracts that come in. They've also put out 100-ounce new product, 100-ounce product designed to absorb some of that retail demand for smaller players in the market. In other words, what's happening was the big banks were putting so much short paper in the market, it wasn't doing anything. They have a smaller contract with a little bit higher margin to entice smaller players in. They're trying to get people in to that trade to slow that price down. And those are some pretty big moves. And that's an indication that they can't control, you know, this bull market, what's going on. Last thing before I turn it back over to you, China, I think, peaked at $9 to $10 over spot. It went over $100 US per ounce of gold. It was about $10 higher than what we were trading here in the US. So definitely robust physical silver demand. The COMEX and the CME group that runs that, responding to that with several measures to slow that down and to absorb some of that demand on that derivative market and to get that price down. But I think what we're seeing across the pond in China, what we're seeing with potential shortages in London due to people putting so much money in the ETFs and gobbling up all that free silver in London, is we're getting real close to that big squeeze condition in the physical. And if that happens, you know, all bets are off. Silver could go anywhere.
Yeah.
Because it's an industrial commodity and people need it. It's not, you know, like gold, you can kind of, you can talk people into going to other things. Because gold is used in industry, but in jewelry and in computers and stuff like that, you know, electrical connections, but it's not demanded or required like silver for everything. If we see issues in physical silver shortages across the world, then silver could go to any price because the world needs it. I mean, you could be looking at $500, $1,000 silver at some point when we get to that shortage. I don't think we're at a shortage yet. What we've seen is that there is a refinery glut here in the U.S. There's so much selling in the U.S. because people are taking advantage of the high prices that the refiners are basically at limit. they can't take anymore. And that's, why you see silver prices going up on like generic coins and bars, $9 an ounce if you're at APMEX or JM Bullion or those guys. But I do think that there is silver there. It needs to be refined. So I think at some point, we're not out of silver yet, but we're getting close to that point. And I don't know if it's going to happen this year, but I think it's very possible that we, Bank of America has a $309 target. We may hit $300 silver. I mean, who knows? And it's just, I've been in this 16 years. I've never seen a run on gold and silver prices like I've seen the last 2 years. It's been phenomenal. You've had central banks buying gold like mad since 2011. 2025 was the most bought in the history of central bank purchasing. That year was the highest year. So gold has been gobbled up. Yeah, people buying gold. The rush to gold is in because look at the prices. And it's funny, there was a meme that I put out on Twitter where it showed $20 silver, nobody lining up to buy it. $80 silver, a few people lining up to buy it. $100 silver, you had to line out the door. That psychology of every market, stock market, houses, whatever, as the price goes up, people rush in. And we're not even to that point of where most of retail's rushing in. But you got the geopolitical concerns, you've got the shortages in silver, you've got central bank buying of gold. So we've seen issues in London and now coming to the US and the industrial markets where they're not able to deliver. People are standing for delivery. It's been shown that in January, several times this month, and this is unheard of since I've been following this for 16 years, that in January, people are pulling futures contracts into the current month. Usually, as you go further into the month, people roll those contracts over into the future. It's a futures market. They're playing what the price will be in the future. People are rolling contracts backward into January at like 5,000 a day in silver, trying to stand for delivery. And it costs a lot of money to do that. And they're trying to stand for delivery. And the risk is that they get stopped out of that contract because there's a time as a factor. They would rather take that risk of loss on the derivative side of the trade to try to stand for delivery. And JP Morgan has been selling a ton of their physical silver stock when you look at the physical stock reports available on NYMEX. I've never, in 16 years, have never seen that in the gold or the silver market. And, we're not at a real silver squeeze shortage just yet. We still see scrap coming in. We still see some of the big online dealers having the stock. But when you go $10 over spot on generic coins and bars or private mint coins and bars, and they're pretty bars, nothing wrong with them. It is the last product that gets bid up, and it's been bid up. You're 2 months out on American Silver Eagles. They can't print them. Maple Leafs are starting to go unobtainium. They can't print them fast enough. And, the junk silver is doing very well, constitutional silver. And now the private mint coins and bars are $10 over spot. Definitely a lot of retail demand. And because of the constraints on the refiners, they can't get it out fast enough. So those premiums are going to continue to widen. I've never, in 16 years, I've never seen a market like this on the industrial markets that determine spot prices or on the physical markets. And we haven't even gotten to the big retail rush. I mean, we're having sales and people are just now the first timers are starting to get into it, but we haven't had the big retail rush yet. And we're sitting almost at $100 silver. I've never seen it. I've been 16 years. I've never seen this before.
The silver market is exhibiting unprecedented signals of a physical squeeze, most notably with traders rolling futures contracts backward into the current month to demand immediate delivery. This anomaly, unseen in over 16 years, is occurring alongside aggressive margin hikes by the CME Group designed to curb paper speculation. Despite these interventions, the physical disconnect is widening, with premiums in China hitting $10 over spot and major mints facing multi-month delays on sovereign coins like American Eagles and Maple Leafs. While Bank of America projects a potential surge to $309, the current bottleneck is concentrated at the refinery level. High prices have triggered a flood of scrap sales that have overwhelmed U.S. refiners, creating a paradox in which raw metal is available. Still, retail product is scarce, driving premiums on generic bars to historic highs. With the gold-to-silver ratio compressing toward 35-1 and the true retail frenzy yet to begin, the market is primed for a chaotic repricing event. Let's get back to the interview.
The silver market is so tiny relative to money supply, it's so tiny relative to the global markets. And at the same time, we know it's got, centuries of history when it comes to being money. And people have recently neglected that. And I think that part of the way it's so embedded in the industrial and electronic side of the world is also because silver prices are so low recently, and people have rediscovered how critical silver could be for those purposes in terms of efficiency. Yeah, you can potentially replace silver in some cases, but you cannot replace the efficiency of the metal, certainly. And so that inherently creates a bottom for the market, just like the gold market. I mean, you take gold to $1,000 an ounce, it will become very largely industrially driven as well in terms of demand. And the reason why it doesn't go there, it's not because it's not an industrial metal. It's because it's just so efficient and so useful as a metal that it becomes a currency, and it's not abundant. And so it's the same thing with silver. Mostly, I think we'll continue to see this monetary aspect of it grow substantially. I think that central banks will start buying silver if they're not buying already. The same type of buying that we're seeing in the gold place, in the gold world, I think it looks like the silver space. Every dip is being bought. And I know we're talking today on the day that we're seeing a dip. And it's just outstanding how this market continues to be bought in those days. And so I don't think how this is likely to change. I'm very involved in the discoveries and in the world of looking for opportunities on that side. And I can tell you, there's no major discoveries that will change the landscape of supply of silver anytime soon. Not only that, majority of the silver mines that are in the world today are losing their quality when it comes to grades in a very substantial way. And yeah, I honestly, I think this could take a dimension that I don't think none of us, our biggest risk as investors is to be so disciplined. Personally, I really think that's the case here. We as investors in the gold space and precious metals really, really appreciate discipline, really appreciate and hate the fact that the government has taken a different path in that sense. And I think that could play against us here. It can play against us in a big way as investors. And so let it ride is my way of, I can't tell people how to manage money, but that's the way I'm thinking about this. I'm being very cautious about being too cautious. I think the biggest opportunity in my view today is in silver miners, believe it or not, despite the fact that we've seen such a large increase in silver prices, is precisely the reason why the focus should be in silver miners. People are looking at this and saying the industry's broken. Well, look at the SIL to silver ratio, and it's at all-time lows, while silver is at $90 a barrel, $9 an ounce. What's wrong with the world? It's not wrong. It's an opportunity, in my view. That's what it is. I mean, I remember looking at the gold to silver ratio, gold going banana here recently, and that ratio was at 90, and people are telling me this time is different. I mean, come on. There's 300 years of history that you can look at. I posted that chart multiple times and saying, how many times in history have we seen the gold to silver ratio stay at 90 for 2 to 3 years? It doesn't stay there. I love when I find a world or an asset or an opportunity in the markets where, look, there's always a situation where people make fun of this time is different all the time. And there are situations that this time could be different. Okay. Maybe this time is different. I don't know. But here's, as an investor, the way I approach that this time is different idea. Okay. You look at the price of an asset. If the price of an asset, everybody's overwhelmingly thinking that this time will be different, that's when you want to do the opposite, right? Because history tells you otherwise all day long. And everyone is saying, no, history is wrong. That's when you go heavy. And that's what's going on with the silver miners to silver ratio, in my view. We don't see this going on for too long. And then some people will focus the wrong way. They're going to say, so you're saying silver will peak? No, that's not what I'm saying at all. I'm saying that we're going to see a major catch up with the silver miners. So you can't help some people, it's just, they will invest in a way that I just cannot relate.
We've got a 1/2 ounce gold proof quality round coming to the store, and we're talking about doing like 1/2 ounce silver. And I never thought that I would sell a 1/2 ounce silver. Not that there's anything wrong with it, but at these price points, again, it's all some people can afford.
Yeah.
And the other thing that Kinesis has on their store are the ARMs. So we've got ARMs, just the same manufacturer as Goldback, on theirs. We have ours in the store as well. And sales of those have started to really go up. People are buying sets of the different 5 denominations we have. They're buying singles. Right now, we have free shipping on everything just to help people get into it. So we don't charge you shipping. We don't charge you packaging. It gets sent, FedEx, insured with delivery, to your door. And if you want to get into fractional gold, those bills are a good way to get into it.
Yeah.
And then what we're trying to do is get the fractional gold bars back, and we're trying to print them as fast. Every time I get gold in the store, it's gone because the wholesalers that we trade with buy it before I can get it up on the store.
Yeah.
They sit there and look at the way they must F5 10 times a day. And as soon as I get gold in the store, it's gone. So we're ramping up, our manufacturing of gold. We're doubling and tripling. And on the silver, I think we are going to go to fractionals. We're talking about doing fractional designs, beautiful designs. Kinesis has some of the best designers in the world. We've got 6 designs sitting there we've never debuted. We think that we're going to pop those out. And I'm thinking instead of doing 1 ounce coins, we may do ½ ounce silver, and that may be our biggest seller. So we're definitely responding to that. And you're right, it's crazy. It's just a crazy market. And it's good because it's those people that have been stacking. I tell the story a bunch of times. Guy came into my store about 3 years ago, 2.5, 3 years ago now. And he came in, he was mad. It was during the summertime. And he had a monster box of maples. And he's like, I want to trade this for platinum. And I said, I don't know if I can get you platinum because platinum is hard to get in packaged form. Manufacturers can get it, but getting it in coin and bar form is hard because there's a scarcity due to it being used in catalytic conversions and stuff. Not a lot of retailers had it. I went to my wholesalers and I couldn't find enough, and he got pissed. And he's like, Rob, I want to go into platinum. This silver thing's not going anywhere. Well, I hope he kept that monster box of maples because he quadrupled his money. It was sitting at $21 when he came into a store and threw it down on the ground on my counter and said, I'm pissed off about silver not running. It's gone up for $21 to, what is it, 93 something today.
Yeah.
Whoever you are, you're out there. I don't remember your name. I hope that you listened to my advice and kept it because you 4.5x'd your money in the span of about 2.5 years. And we're not done yet, Daniel, because the pent up demand for silver, it's industrial with the shortages that we know the last 5 years from the mine, but it is also now the monetary demand's coming in. What does David Morgan always said? When that monetary demand comes in, silver's going to run.
Yeah.
And, David Morgan has many times on my channel said maybe $600 silver. That's not a recommendation. You do your own research, but what if we got to $600 silver?
It's possible. I
may be minting 1/10 ounce
Yeah.
silver coins just to help people out. I mean, I don't know where this is going.
The current market dislocation presents a historic opportunity in silver mining equities, which are trading at all-time lows relative to the metal price. Despite silver reaching $90 per ounce, the mining sector has yet to reflect this valuation, creating a massive catch-up trade similar to previous reversions in the gold-to-silver ratio. Investors betting that this time is different are ignoring centuries of data, suggesting that such extreme divergences always resolve with a violent upside for the producers. Simultaneously, the physical market is undergoing a structural shift toward fractional ownership. As valuations climb toward potential targets of $600, mints are preparing to issue ½ ounce and even 1/10 ounce units to maintain affordability for the average buyer. This transition confirms that silver is reclaiming its role as transactional money, driven by a convergence of industrial shortages and a resurgence in monetary demand that rewards the disciplined holder over the impatient speculator. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.